All right, Peter, what jumped out at you? Were you relatively encouraged by what you saw today?
Very encouraged. The second quarter outlook is better than our bullish forecast. And stepping back from the earnings report, this company has won the streaming wars. This company has a broadening array of growth strategies. We think they're defining the future at this point, and the price of the stock is just fine.
What do you make of sort of the push into the ad tier? And I know we don't have sort of all the specific numbers here, but they kind of seem to be hedging the idea that they're still doing well with just normal paid subscribers, but clearly the ad tier is going to become a much bigger player in this business over the years.
You know, streaming is ultimately a consumer service. And in consumer services, consumer products, segmentation is everything. Advertising-supported video is a tale as old as time, or a product as old as time. And Netflix's absence from it was a quirk of the companies that had run its course. And so they're absolutely correct to be building this ad tier. We think advertising revenue will exceed $2 billion this year. And the company let everybody know a few days ago, whether intentionally or not, that it envisions $10 billion of advertising over the long run. There's about $60 billion of long-form video advertising in the United States. So it's a really ambitious but still plausible target. The company just turned on its own ad server this month, and so they'll be better able to target advertising starting just about now.
Do you think we'll ever get to the point where Netflix is going to force everyone into an ad tier, Peter?
I doubt it. I think that so long as customers want to pay a premium to experience Netflix without ads, Netflix will be happy to charge them for the privilege. Nobody will escape advertising on sports, of course.
No, that would be just counterintuitive in every single way, given that it's appointment viewing. Peter, you mentioned how it's clear that Netflix has won the streaming wars. Who or what is its biggest competition now? In the past, it said Sleep was a competitor. It's also identified YouTube as a competitor. Who or what does it compete against now?
Yeah, as you alluded to, Netflix talks about YouTube as its primary competitor. And in looking at the streaming engagement data, YouTube is getting about 50% more engagement every month than Netflix is. And in my household, the younger members of the household watch a lot more YouTube than Netflix. And that's something that Netflix has to worry about it when they think about the world on a 10-year basis. Over the next 2 years, that doesn't matter at all. The two can coexist and thrive side by side. But this is a company that has always thought very strategically and managed the short term and the long term together. And a company in that mindset will certainly be thinking about ways to evolve its service to expand the segments of the market that it addresses for the long run.
Does that strategy extend to one day platforming user-created content as opposed to professionally made content? Because that's what YouTube has that Netflix doesn't.
So they're certainly exploring it. They've almost said as much. It's a really tricky product for them to address in the near term or to provide, because Netflix is all about premium and YouTube is all about mass market. And so whatever Netflix might do someday in quote unquote user generated content has to be done in a very premium way. There are recent examples of content creators who are sort of going premium. The deal between Mr. Beast and Amazon is the one that gets the most attention. We were in Los Angeles last month visiting with management teams and a group of clients and found broadening interest in this concept, but it's still very much a whiteboard area of content development.
All right, Peter. So in about, 30 minutes or so, we're going to get the start of that conference call, if you want to call it that. Obviously, it's only one person asking questions. But, I mean, if you had a chance to ask a question of Sarandos or Peters, I mean, what would you ask?
My question is about content spending. I view the Netflix flywheel as beginning with content spending and, of course, doing it productively. And I want to know how much they think they can spend over the long run, because if they can do it productively, it'll just drive more and more growth and reinforce their competitive advantage. So I'm rooting for more content spending, even if it's at the expense of operating leverage in the next few years, because this is the time for them to press their advantage.